Markets have entered the stage of high volatility. Oil is holding steady near $55 a barrel. The ruble is testing new lows against the dollar. The short-term outlook for the ruble remains gloomy. The energy market is trading mixed today amid contrasting factors. On the one hand, the coronavirus pandemic continues to weigh on the market, and investors are still concerned about weak fuel demand. Some countries consider introducing stricter lockdown measures to curb the infection spread. China is in close focus today, as it is the biggest oil consumer in the world. At the same time, market participants expect to see supply cuts under the OPEC Plus deal. The strategy approved in early January is supporting crude prices. Saudi Arabia pledged to reduce its output in February and March, giving rise to market optimism. Besides, positive news on vaccination helps maintain an optimistic mood. There is a high chance that the vaccine from Johnson & Johnson will be approved next week. On Friday, global oil benchmarks are trading in different directions. Brent was moving higher in the morning session, but the bullish activity was rather weak. As a result, Brent settled at just above $55 a barrel. Yesterday, bears managed to push the quotes lower, so it's possible that today the price may decline to the area of $54 a barrel. Meanwhile, North American crude has slipped into the red. WTI futures contract was last seen trading at $52.10 per barrel. High market volatility is explained by the overall sentiment in Western exchanges. Over the past few days, we could observe a roller coaster. Amid rising uncertainty, investors cannot decide on whether to flee to safe haven assets or choose risky ones instead. In the meantime, economic data favors the bearish trend on oil, while there is no strong drivers left to send prices higher. Besides, there is still no news on the stimulus package promised by the US president. Markets are getting tired of growing expectations. The Russian ruble is struggling to hold firm. On Thursday, the US dollar rose to 3-month highs against the ruble. By the end of the session, the ruble managed to win back some losses, but the situation is unlikely to get better. Today, the greenback advanced notably in the morning trade, offsetting all the gains made by the ruble. Early in the day, the dollar-ruble pair was trading at 76.20, adding 0.4%. The ruble is mainly pressured by geopolitical risks and sanctions. What's more, the approval of a new relief package in the US has been delayed due to the disagreement between Democrats and Republicans. Markets hoped to see the rollout of support measures in February, but the stimulus program is likely to be postponed. Another blow came from China, which warned about new financial bubbles on the stock and real estate markets. These comments made investors leave risky assets, including the ruble. In addition, the latest news contributed to a gloomier forecast on the Russian assets. Experts say the ruble may roll back to a 5-year low against the dollar. This will send the pair up to the level of 82. At the moment, there are no serious reasons for a collapse. The nearest support for the ruble is found at the level of 78. The ruble may test new lows ahead of the weekend. New protests in support of Alexei Navalny are expected in Russia. You've watched daily financial news on Insta TV. Thank you for watching and have a great trading day. Bye.